But let's shift focus then to Hatsun Agro Product. The company witnessed its margins improve after 8 quarters due to price increases taken in the last 12 to around 18 months. There was a huge jump in other income as well that's aided the company's profitability. Mr. Chandramogan, the chairman at Hatsun Agro, joins us on the show. Hi, sir. Good morning. Thanks so much for joining in. Well, give us a couple of numbers first up. You know, your gross margins have improved, and that's what's helped your margin performance as well. Do you expect margins to head a little bit higher from here on? What kind of a guidance can you give us for the second half of the year?
See, the first half of last year, we suffered with commodities bound for reconstituting of milk. Now we have enough milk, number one. Number two, our milk arrivals have improved by 20 to 25% in the month of September and October, which gives an indication that the second half cost will be under control. Not only that, we were not into dairy ingredient business. That is one of the reasons for the growth of business being less with a single digit. Hopefully, the second half will have commodities also joining in, and mostly it will join in on the fourth quarter. But in the second half, commodities will also play a role because we have enough milk and we have enough products which we can sell in the market.
Mr. Chandramogan, can you tell us what exactly was the volume growth that you saw in this quarter? And what is the kind of average volume growth that you can do in the second half of the year?
Volume growth has started happening only by September with the procurement. October continues. The volume growth is likely to be somewhere around 20%. Volume growth is expected. And this is going to play a
Sorry to interrupt you. I didn't mean to do that. But 20% volume growth you said would be for the full year, is it? I'm just trying to get the timeline.
No. The first half, we were gradually stepping in, and the second half has got that 20% procurement in hand as of now. So this will reflect in a better sales with the commodities, apart from the branded business, whatever we have. The second half revenue will be better than the first half. Margins will be sustained and maintained, not an issue.
So it's fair to say. So it's fair to say that the volume growth in the second half is expected to be 20%, right? That's what you're saying.
15 to 20%, because probably commodities will not be sold in this quarter. This quarter will not have a better price. So the next quarter only we will be selling the commodities in a big way. And the subsequent quarter we will be holding the stock. So it may be somewhere around 15 to 20%. You can say that.
Sir, good morning. You said you'll hold the margins, but from this 10 to 11% band, could you move to the 11 to 12% band? I mean, is there visibility?
We are already at 12.22 EBITDA. So the EBITDA levels can be sustained without any difficulty with the increased sales in the second half.
Okay. All right. Give us a little details on your balance sheet, sir. I think you were talking about bringing the debt down to around 500 crores in the next 2 years. Currently, you're at around 1,500 crores. You've done a rights issue, I think a QIP as well in the last 12 months or so. Where do you see this debt number end this fiscal? And by the end of FY25, does it come down to that 500 crores?
FY25-26, we are expecting it to happen for two reasons. Actually, we have a heavy depreciation, and also on the interest, there is an interest which is also about 30 crores. So that is not a cash outflow. The depreciation and cash inflow of interest itself is more than 400 crores per year. So that will be an inflow apart from the normal profitability what we are looking at. This year, fearing the last year problem, we also kept a heavy stock. So those stocks will get diluted over a period. So both put together, it will reduce the working capital burden and the debt together with a better profitability in the coming second half.
Just to follow up to what Prashant had asked you on margins, you said margins will sustain around these levels. So is it fair to assume that you will, your gross margins in Q2 were around 30%. So that's something that you can hold on to for the rest of the year. Is that correct?
No. I'm only saying EBITDA of 12% plus is possible for the second half. I'm not talking about gross margins and all that. Right.
Okay, so EBITDA of 12% is sustainable for the second half of the year. Got that. And in terms of your debt,
Incremental sales.
with incremental sales, yes. yeah.
Debt will start coming down with the dilution of dairy ingredients. By April, May, June, I think the debt will come to less than 1,000 crores in our opinion.
Okay, so less than 1,000 crores of debt by April of 2024. Got that. So
I'm talking about June 2024. The
June
dairy
2024.
ingredients dilution may take place and the debt will come to less than 1,000 crores, I'm saying.
okay, and earlier you had told us that you intend to take the debt below 500 crores over the next 2 years. You hold on to that target, is it?
That's right. I'm talking about only the coming year we will be less than 1,000 by June. And another one more year is there where we can just bring it down to 500.
All right, we'll leave it there, sir. Good luck and appreciate you joining in with all of that perspective. And it's always a pleasure, sir, speaking with you. Let's just